want to learn how to analyze and trade boom and crash, then you're in luck, because this is the video just for you. So in this video, I'm going to take you step by step. Even if you're a beginner, I'm going to take you step by step until you'll be able to analyze and trade boom and crash profitably, so that you can be able to make money from the market, right? It doesn't matter if you're a beginner. It's actually easy to make money on boom and crash. Not easy, but I shouldn't say easy, but you can actually make money using trading boom and crash if you put in the work, right? So let's jump into it, right? So how do we analyze boom and crash? First of all, we go to what I like to do personally is I like to go to the higher time frame first of all, right? So you can go maybe to the, usually the 4 hour is my major time frame, but sometimes I go to the 1 day chart, 24-hour chart, right? So on the 24-hour chart, you go, right, and you'll be able to mark your key zones, right, visible zones that the market can react from, right? So when you go to the 24-hour, you go to your 1 day chart, mark the visible key zones, right? So as for me, I mark all my trend lines, support and resistance levels, right? So what are trend lines and what are support and resistance levels, right? So I'm just going to be skipping some parts over here, because I'm sure that most of you know what trend lines and support and resistance is, right? So support and resistance, let's say we're going down, right? We're going down like this, right? So a support is an area. A support is an area that lifts the market, that makes the market react going up, right? So we're going down, right? And when the market reaches a support area, there's a reaction that the market goes up. This is a key area. This shows that this is a key area because the market reacted to that level, right? So you have to highlight this level over here, because it's a support, right? And if the market is in a downtrend, right, you highlight this zone, right? Market goes up a little bit, comes back, doesn't respect that support over here, right? It actually breaks that support over here. Oh, so what do you do in this case? You don't neglect this area because it was just broken, right? You have to mark it into the future, right? And when you mark that area into the future, the market usually comes back to that area, tests that area, and continues going down, right? So a broken support acts as a resistance. So the opposite is actually true, because a broken resistance also acts. So right over here, this over here is our resistance, because we are going up, right? The market comes to a certain area. We don't know, even it hasn't even reacted before to that area, right? Market comes to a certain area, right? Pulls back, right? So this shows that there's some volume, some momentum over there, some influence over here, right? So you highlight that zone, market goes down just a little bit, comes back, breaks that area again, right? Over here, and when market comes back again to that area, right? If I highlighted it already, usually the market gives a rejection or candlestick confirmation over here, right? And it gives that candlestick confirmation. What you have to do is for you enter your buy. So in this zone, that's where we're going to be looking for buying opportunities, right? So we have to highlight these zones like this, highlight these zones, because the market usually reacts at those zones, right? So you can highlight them using this rectangle, because I don't want to take them as straight lines like this. Why? Because sometimes market comes back, right, and it doesn't actually reach this line over here, and you are waiting for this line, but it's reacting to the zone, to that area, because the market can come back, doesn't test this line exactly, right, or it breaks above that line, right, just a little bit, right? So if you think of them as zones, you will be able to utilize them best, right? So that's what we're going to be looking for in our charts first of all. So those are the areas that I like to highlight, right? Then of course I'd like to check for the trend, but the trend is just like what I'm showing you, right? So the trend, how do you spot the trend, right? The trend you spot it by checking if the market is creating higher highs or lower lows. So when the market is creating higher high, higher low, higher high, higher low, higher high, and higher low, the market is in an uptrend. But if the market is going and creating uh, a lower low, a lower high, lower low, lower high, lower low, lower high, the market is in a downtrend, right? So those are just the key points that I want to look for, right? So check the overall higher time frame trend, right? The current higher time frame trend, because we can have many trades. The 24-hour can be in a downtrend, but overall on the 1 hour currently we're going what we're bullish, right? So let's take this for example over here. This is crash 500 over here, right? So if you can check this chart, if you can see on this chart, right? Let me just zoom in a little bit, right? As you can see in this chart, what are we able to see? We are seeing that the market was what over here. This was our key area over here, another key area over here, right? The market breaks this key area, right? So it's creating what? Lower low, lower low, lower low. Also breaks a little bit past this key area over here. So we'll be saying that the market overall is in what? It's in a downtrend, right? Because we are creating what? Lower lows over here, right? You can actually highlight this zone over here. I'll refine it on the 4-hour time frame, or yeah, on the 4-hour time frame, right? We can say that the market is what? In a downtrend overall. But within this downtrend, when the market was going up over here, if we drop down to the 4-hour time frame, we can spot an uptrend, right? So over here, this key area over here, we highlight the what? When you're highlighting our order blocks, what I like to do is on the when the market starts pulling down, right? On this area over here, you highlight the last opposite candle, right? So over here is the last bullish candle over here. This is what we highlight, right? So we mark that. So that will be our area. That will be our order block, right? So that's the order block that I was spotting on the 24-hour chart, and I like to mark them on the 1 hour and the 4 hour. Those are the areas. Those are the time frames that work best for order blocks, right? So over here, what I was saying is the market can be in a downtrend overall, but as you can see on this pullback on the 24-hour, right, the market is actually creating what? A higher high, higher low, higher high, higher low, higher high, higher low, higher high. So within that overall trend, right, the market can be in an uptrend, right? So if you're not going to be taking your entries on the 24-hour or on the 4-hour time frame, you have to drop down even lower, right, to go to 1 hour or even your 15-minute time frame, because that's where we're going to be getting our entries. And this it's always best to trade what in line with what the current market trend. Overall, is best to trade with the overall trend, right? But we can't wait 4 days without getting an entry, because we are waiting for what? For this selling opportunity, right? So within this pullback over here, we are also going to be looking for what? For our entries, right? As you can see over here, if you can see from my, let me go back to the 4 hour. From my overall analysis, what I was looking for when this market was somewhere over here, I was anticipating that the market will pull back to this area over here and break past it. Why? Because the market was creating lower lows. But as you can see, the market didn't reach that point exactly like that at that time, right? The market actually came back and retested this order block, this 24-hour order block, and went back, right? So this pullback over here, where it is right now. So even if I'm waiting for, you can wait for this setup for days, and if you just wait for this setup, you won't be able to get to get your entries. Why? Because the market does what it wants. You are not the market is in my father's, right? So I'm not able to control it. I don't know. It does what it wants. It does what it wants when it wants, however it wants, right? So you just have to react to what the market is currently doing at that time. That's another tip for you guys. React to what the market is doing, right? Don't anticipate what the market is going to do every time. Just react what it is doing at that time, how it is reacting at that time, right? Because you are not able to control the market, just be able to adapt, right? Is the best traders that I've seen are the ones who are able to adapt to what the market is currently showing, what the market is currently doing, right? So that they can be able to utilize that at that specific time, right? So over here, what I'm spotting over here is, as you can see, we've actually broken structure to the what? To the downside, right? So over here on the lower time frame, on the 4-hour time frame, 1 hour time frame, we're creating what? Higher high over here, higher low, higher high, higher low, higher high, higher low. Right. So we were what? In an uptrend, right? But over here we've changed what? Over here we are now what? In a downtrend, right? So I'd like to highlight this as a key area over here, right? We broke what? Past this, and broke past this over here, also over here, right? So over here we've got what? I retested this what? This small order block over here, So over here, you are in a what? You're in our buys. Why? Because the market rejected this area once, came back, creating a what? Creating a W, rejected over here again, right? So when you get out or engulfing candlesticks over here, candlestick confirmation, we enter, right? But when are we going to exit? We're going to exit when the market is coming closer to this area over here. Why? Because the market has broken structure over here. So we don't know what the market is going to do. It can continue that, it can decide to continue that downtrend, right? Come and break all these levels over here, right? So, or it's maybe it wants to retest this level over here, right? So we have to just adapt to what the market will be doing at that time. You don't know what the market is going to do, right? So we have to wait. And but if you are in a buys, wait until it exits when the market is reaching this area over here. It doesn't have to reach this area exactly, right? Just maybe below that area a little bit, right? That's when you'll be able to exit your buys and also starting what entering your sales. Sales I like to, when I'm catching spikes, I like to enter small and then I will keep on what if the market goes against me, I will just add a position once in a while, maybe after 5 minutes, I add another position so that when the spike comes, it will put me straight into profit and I'll be able to make more money. And it also reduces your risk because you're not putting one big lot size at the same time. Because if the market delays with that spike, you'll be losing money fast. Right? So it's easy. It's better if you put smaller size first, right, then gradually increasing when the market reaches the exact point that you want to enter, right? Because if you want to wait exactly when the market reaches this point, what if it starts spiking below over somewhere over here and you are not in that trade, right? And it's also not safe to enter a large position and the market hasn't reached that area over here, that area yet, and the market uh, starts going against you, you'll be losing a lot of money. So over here, what I like to do when I'm trading boom and crash is I also like to enter on the 5 minute time frame. And as for me, I usually trade ticks, right? I usually trade these small ticks. Spikes I rarely, just once in a while, right? So when I'm entering for my ticks now, I also like to add what moving averages. So let me just add my moving averages. Where do I add? Okay, so on my indicators, I like to use the 50 moving average, right, and the 200 moving average, right. So that's what I'm going to be using, right. So over here, let me change the settings, inputs, 50 moving average, apply to the source on MT5. It says apply to close, then type of line, it's exponential moving average, right? Then click OK. And then I want to add that I would like to also add that 50 moving average, sorry, 200 moving average. So over here, we're going to change this to 200. Apply to close, smoothing exponential. I like to use exponential over here. Then style, let's make this purple. Don't know why I want to use it purple, but let's go with purple. Then maybe how do I make this line a little bit thicker? Let me make it thicker over here. Then we click on. Okay, right. So the line that I usually use is just the 50 moving average. That's where I get my entries, right? The 200 moving average, I use it on my 15-minute time frame when I'm trading on my 15-minute time frame. That's where I use it, right? So we can actually delete this 200 moving average. Let's just use the 50 moving average for now, so that I'll be able to show you how I trade using this, right? So over here, right? So the same strategy that I was showing you, the zone flip strategy, it still works over here, right? When you are highlighting what your previous resistance levels, like something like this, right? We've got this key area, that's this support area gets broken, pull back to that area, market drops, and pull back to that area again, and the market what drops again, right? As you can see over here, this is also an area, since we are looking for our buys over here, right, up until this point. As you can see, what reaches to that to this support area over here, right, we can take what our entries. Let's say we missed that opportunity over there. When the market pulls back to this area over here, right, take this support and resistance, right. As you can see, when we highlight this to the future, right? The market pulls back again to this area, and it's also retesting what 50 moving average over here. So I take this by with an with easily, right? Enter my positions. Why? Because I know that the market usually reacts at these points over here, right? So I take my buy over here and wait for what for it to reach my TP, or maybe this resistance over here. Of course, this will be my first TP if I entered many positions, right? This is where I exit some of my positions, and somewhere in this region over here I exit all my positions and wait to see how the market reacts at this level over here, right? So this sort of level over here, the market has already reacted to this. Now I mark what other zones, right? And this is also a key zone over here. This resistance that has been made over here, it's also a key zone. The market can break past it, come back and retest it later and continue going up. But what I am anticipating over here is that the market will what, go up, right? Maybe come back, retest this, come back, maybe wants to retest this area over here. Then if it wants to go down, it will go down, it will continue going down at that point, right? That's what I'm anticipating, right? So let me just show you how I analyze on the list code, but this is just what I do. Usually you can see that the market usually reacts at the 50 moving average without even going to what to our zone flip levels, right? The zone flip is just another confirmation, but usually I just enter using the 50 moving average. But when the 50 moving average and the zone flip area meet, it's a sweet spot. I like to call it a sweet spot because I know that the trade is usually guaranteed. That's when I'll be able to what to take a little bit of larger risk, because as you can see from this trade over here, let's mark this over here, right? If I enter over here, my stop loss is obviously just below what, let's mark this over here. My target, I said somewhere over here, my stop loss is just below this support area over here, right? But you can actually drop it a little bit further, right? Because the market is reacting to this small order block over here, right? So if you want, you can actually reduce it to this over here, right? But as for me, on boom and crash, I don't want to use tight stop losses, right? So I just give it a little bit room to breathe, right? Because sometimes it can just break a little bit and then continue going your way, and you'll be out there cursing yourself, oh, I'm so stupid, I'm so whatever. Why? Because you just had to put your stop loss a little bit too tight, hits your stop loss and continues going up, and now you're thinking, "Ah, wait, I should have been in this trade. It's now making a lot of money," but you'll be cursing yourself. But it's not your fault. It's just how the boom and crash market reacts, right? Sometimes it just hits your stop loss and still goes your way, still goes the exact direction that you were anticipating, right? So this area over here, like this over here, this is a resistance area, right? Market to the future, it gets broken, the market pulls back to this area, right? And as you can see, the 50 moving average is also right over there, right? Market creates what ugly W, like, right? Then you take what your positions, right? So if you take this market to the future over here, resistance gets broken, market pulls back, doesn't pull back exactly to this line, but it pulls back to the moving average and it goes up a little bit. Then over here, market breaks, retesting this. As you can see, the 50 moving average also works both ways. You can actually catch spikes with it, hold it, support level, go up. Let me just analyze I'm sure where I don't have my analysis is, let me check boom 300, right, so that I can analyze it with you guys and see where we'll be able to to take our trades, right? So this is boom 300, right? So what I said, we go to our high time frame first. Let's go to the 1 day chart. So let's see how this is reacting, right? So this actually moved quite well, right? So on the high time frame, I want to check the overall trend, right? So as you can see, the market is breaking, continuously creating what? Lower low, lower high, lower low, lower high. Then this is actually a lower low from this extreme high point over here, right? Though on the smaller time frames, right, we can see that the market was creating what was going up over here, right? It was breaking this high low, high low, high low, high. But this is not the overall trend, because overall you can see that the market is in a downtrend, right? So you might highlight these key zones over there, the key zone over here. and goes over here. There's another key zone. Got maybe over there. Got another order block over here. I will find this on the 4-hour time frame, by the way. Mark this area over here, right? So we've got an order block over here, right? And if the market disrespects this order block, we know that it usually maybe just this one over here, but want to mark the immediate one first, and then when the because we want to react to what the market does, right? So first of all, we just to mark where the area where the market is going to reach first, right? So we're going to mark this area first, but then if it gets broken, the area that we'll be anticipating to see a reaction from will be this area over here. So that's how I mark my. I don't. Let me see if I check. I can see any trend lines, possible trend lines over here. I see none. Okay, maybe except this one. But yeah, it doesn't actually work because this is the second point. Maybe if we're looking for what, if we're anticipating that the third touch will also come touch this over here. Nah, it's far-fetched. Far-fetched it is. And so we drop down to our lower time frames. Lower time frames, right? Though the 4 hour isn't a lower time frame, but we drop down to the 4 hour. Let's say we drop down to the 4 hour time frame, right? So over here, pretty much marked all those areas again. Oh, sorry, this was marking this over here. All right, so I want to zoom in a little bit so that I can refine these order blocks over here. So let's just mark this one because this one was consolidating and the same as this. So let's just leave them as they are, as it is, right? And then let's check for trend lines. So over here, let's put a trend line over here. So there's a trend line over here actually. This chart was messy, but it actually has a lot of potential, right? So over here, right now I'm going to be drawing down to, so overly, since we're in the in a downtrend, what I'm going to be looking for is, let me go to the 1 hour, right? And I'm going to be looking for my entries somewhere in this area over here. Let me just show you. Let me delete this line over here, and let me put another fresh one over here. In this area over here, right? What I'm seeing is the market is overall in a downtrend, right? And I hope the market reaches these support levels soon, comes back and reaches this area over here. Why? Because I'm seeing that the market is in a downtrend, right? And I want to look for my selling opportunities also because the market is in a downtrend. So what else will I be looking for? Right. So I get an retest, a pullback, sorry, to this area over here, right? As you can see, this is one flip area, right? And get proper candlestick confirmation and pattern. I'm going to be looking for my entries, right? So then I just drop down to what the 15-minute time frame or 5-minute time frame to get my entries over here, right? So the market can pull back, then I just wait for the 5-minute time frame to change the trend, right? Just like here, let's take for example, if this was where I was looking for, where I was looking to what to enter my sales over here. If I was looking to enter my sales over in this area over here, what I would do is, right, wait for the market to change its direction, right? So in this case over here, the market comes back, breaks this low a little bit, comes back and breaks it again, right? So over here is failing to break what the higher highs is breaking the lower lows just by a small margin, right? And when the market, so I'm just looking for enter when the market pulls back maybe to this order block over here, right? This resistance over here because I know that the market is ranging over here. It's not breaking, creating what higher highs, right? It's just breaking, creating lower lows, right? So I just wait for a breaking market structure on the 5-minute or the 15-minute time frame. Then I take my entries, right? And then I'm actually good to go. So that's just how you analyze boom and crash. Just look for your zone flips, your support and resistances, and then enter using the 50 moving average on the 5-minute time frame, and yeah, home and dry, you're good to go, and you'll be able to make some profits, right? So if you like the content that I shared in the video, don't forget to like the video, subscribe, and hit the notification bell to get notified whenever I post new content.